What if I told you that the United States government just did something so bold, so unprecedented, that traders on the floor of the New York Mercantile Exchange literally stopped mid-sentence when the news broke? We're talking about a move that hasn't been attempted in modern financial history, the US setting an official price floor for silver, with a target that has the entire precious metals market in absolute freefall shock. $1,000 per ounce, let that sink in. Silver, the metal that's been trading in the low double digits for years, the metal that everyday investors have quietly been stacking in their safes and storage vaults, is now at the center of the most dramatic monetary policy story of the decade. And the ripple effects they're already hitting. Bond markets are rattled, currency desks are scrambling. Central banks from Beijing to Brussels are placing emergency calls to their economic advisors, and millions of ordinary Americans who have been sitting on silver, whether they knew it or not, are waking up to a reality that could change their financial lives forever. This is not a drill. This is not speculation. This is the new reality of American economic policy. And if you are not paying attention right now, you are going to miss one of the most consequential financial shifts of our lifetime. Before we dive deep into what this means, who it affects, why it happened, and what you should be doing with this information right now. If this kind of breaking financial intelligence matters to you, do me one favor, smash that like button right now. It helps more people find this video. And trust me, everyone needs to hear what's coming next. Let's go back to the beginning, because to really understand the magnitude of what just happened, you need to understand the world silver has been living in. For the past several decades, silver has always been the overlooked precious metal. Gold gets the headlines, gold gets the museum exhibits, the rap lyrics, the central bank reserves. Silver has historically been treated like gold's less glamorous little sibling, useful, sure, valuable in an industrial sense, but never commanding the kind of financial reverence that its yellow counterpart has enjoyed. And for a long time that was just fine. The markets priced silver accordingly. Industrial demand kept it relatively stable, and investors who bet big on silver were often seen as fringe thinkers, conspiracy-adjacent characters who kept Reddit forums buzzing, but rarely moved mainstream financial conversations. But something has been building underneath the surface for years, and the US government's stunning announcement about a silver price floor isn't coming out of nowhere. It is in many ways the culmination of a slow-burning economic tension that has been stretching toward a breaking point. To understand why Washington would make a move this radical, you have to understand three things: the strategic importance of silver in modern technology, the vulnerability of American supply chains, and the growing global competition for critical materials that is quietly reshaping the balance of economic power. On the world stage, start with the technology angle, because this is where the story gets genuinely fascinating. Silver is not just a shiny metal you put in jewelry or stack in a vault. It is one of the most electrically conductive materials on Earth. And that single property makes it irreplaceable in a staggering array of modern technologies. Every solar panel produced anywhere in the world requires silver. Every electric vehicle rolling off an assembly line has silver running through its electrical systems. Every smartphone, every tablet, every advanced medical device, every military-grade electronic component, silver is in there. And as the global push toward green energy accelerates, as electric vehicles go from luxury items to mainstream transportation, the demand for silver has been climbing at a rate that most casual market observers have simply not been tracking closely enough. The numbers here are sobering. Global silver demand has been outpacing supply. For several consecutive years, mine production has not been able to keep up. Recycling and recovery operations help, but they don't come close to filling the gap. And here's the part that makes this a national security conversation, not just a commodity market conversation. The United States produces a fraction of the silver it consumes, a significant portion of the world's silver. Mining is concentrated in Mexico, Peru, China, and Russia. If you're a policymaker in Washington looking at that supply chain map and thinking about what happens if geopolitical tensions escalate, what happens if trade routes get disrupted, if sanctions complicate imports, if adversaries start treating silver the way they've treated rare earth minerals, the picture becomes very uncomfortable very quickly. This is exactly the lens through which the price floor announcement needs to be understood. This is not simply a market intervention designed to make precious metals investors wealthy, though that is certainly going to be one of the consequences. This is a strategic economic declaration by setting a price floor for silver and targeting an extraordinary price point of $1,000 per ounce. The United States is essentially saying several things simultaneously to the global market and to its own domestic economy. First, it is sending a signal to American silver producers that investment in domestic mining operations is now protected by policy. If you're a mining company considering whether to pour hundreds of millions of dollars into developing a domestic silver deposit, one of the biggest risks you face is price collapse. What if you spend all that capital building out a mine and then silver prices crash? That risk has historically been a major deterrent to domestic investment. A price floor eliminates that downside risk in one stroke. It tells domestic producers, your investment is safe, mine the silver, we need it second. It is sending a message to global markets about American intentions regarding critical material self-sufficiency in the wake of the chip shortage crisis, in the wake of supply chain disruptions that exposed how dependent the U.S. had become on foreign sources for essential industrial inputs. There has been a growing bipartisan consensus that America needs to get serious about securing its own supply of the materials that power its economy and its military. Silver, given its role in green energy infrastructure and advanced electronics, has moved firmly into that category. Third, and this is where things get really interesting, from a purely financial standpoint, a price floor of this magnitude, if credible and enforceable, represents a once-in-a-generation repricing of an asset that has been chronically undervalued relative to its industrial importance. And the market's reaction to this announcement has been immediate and violent in the best possible sense for silver holders. When the news broke, silver futures contracts surged. Trading was halted multiple times in the first hour. As circuit breakers triggered physical silver, dealers reported their inventories being stripped clean. Within hours of the announcement, the silver-to-gold ratio, which traders watch obsessively as a measure of relative valuation between the two metals, went into freefall as silver began its historic repricing. And on social media and financial forums, the volume of conversation about silver hit levels that made the 2021 retail silver squeeze look like a quiet afternoon. In comparison now, here's where we need to pump the brakes slightly and have an honest conversation about what a price floor of this magnitude actually means mechanically. Because this is important and the nuance matters. A price floor is a government-imposed minimum price below that floor. The commodity theoretically cannot trade in the protected market. The classic example most people know is the federal minimum wage, a floor below which labor cannot legally be priced. In most circumstances, commodity price floors have been used, historically in agricultural markets, where the government has intervened to protect farmers from price collapses that could devastate the food supply. Applying that same logic to silver is an enormous policy leap, and the mechanics of how it would actually be enforced. In a global commodity market, where silver trades 24 hours a day on exchanges in London, Shanghai, New York, and dozens of other venues, is extraordinarily complex. There are skeptics, serious, credentialed economists who are already raising loud questions about whether such a floor is truly enforceable, or whether it represents more of an aspirational policy target, backed by the implicit purchasing power of the US government. The argument from skeptics goes something like this. If silver is trading below $1,000 on global markets, the US government would theoretically need to be a buyer of last resort, absorbing excess supply to maintain the floor. The scale of buying required to do that in a globally traded commodity market could be staggering, and the fiscal implications are not trivial. But supporters of the policy counter with an argument that deserves serious consideration. They point out that the announcement itself, simply by existing and being credible enough to be taken seriously, does an enormous amount of the heavy lifting. Markets are forward-looking. If institutional investors, hedge funds, sovereign wealth funds, and industrial consumers of silver all begin pricing in the expectation that the US government is committed to supporting silver prices at a historically elevated level, they will adjust their buying and holding behavior accordingly. Speculators will rush in, producers will expand the market, Repricing becomes self-fulfilling to a significant degree, reducing the amount of direct government intervention. Actually required, think about it this way. When the Federal Reserve says it will do whatever it takes to defend the dollar or to achieve certain inflation targets, markets move, not because the Fed has necessarily spent a single dollar yet, but because the credibility of the commitment changes expectations, and changed expectations change behavior. The silver price floor announcement is functioning in a similar fashion. At least in the short term, the psychological and expectation management effects are immediate and powerful regardless of the longer-term mechanical questions. So what happens next? This is the question that every financial professional, every precious metals investor, every industrial company that depends on silver as an input, and frankly, every person with any kind of retirement, savings, or investment portfolio needs to be thinking about carefully, because the downstream consequences of this policy, if it holds, are genuinely sweeping. Start with the most direct effect. Silver miners and silver royalty companies are looking at a transformation in their business models. For years, these companies have operated under the assumption that silver prices would remain in a relatively modest range, and they have managed their capital expenditures, their hedging strategies, and their long-term investment plans accordingly. A policy-supported floor at $1,000 per ounce doesn't just improve their margins, it fundamentally changes the economics of projects that were previously unviable. Deposits that weren't worth developing at $30 an ounce become extraordinarily attractive at $1,000 investment dollars. That were sitting on the sidelines waiting for price certainty now have exactly the price certainty they were looking for. Expect a massive wave of capital to flow into silver mining and exploration in the coming months and years. Then consider the effect on the broader green, energy and technology sectors, companies building solar farms, and electric vehicle charging infrastructure have been quietly managing silver as a significant input cost. A repricing of this magnitude doesn't make those projects impossible. The demand for clean energy is not going away, but it does fundamentally change the cost calculus and will accelerate investment in silver reduction technologies and alternative materials. It will also counterintuitively benefit companies that have already locked in long-term silver supply contracts at pre-announcement prices. Those contracts just became extraordinarily valuable overnight. The geopolitical dimensions are perhaps the most fascinating to think through. Major silver-producing nations are going to view this announcement through very different lenses. Mexico and Peru, as leading global silver producers, stand to benefit enormously from elevated prices. Their mining revenues will surge, their government coffers will fill, and their economies will experience a significant positive shock. But they will also be watching Washington carefully, wondering whether this policy signals a broader American ambition to dominate the strategic silver market in ways that could ultimately disadvantage foreign producers. China's reaction deserves particular attention. China is both a significant silver producer and one of the world's largest consumers of silver for its electronics and green energy manufacturing. A sustained elevation in global silver prices is a double-edged sword for Beijing. Better revenues from domestic production, but significantly higher costs for the vast industrial supply chain that depends on silver as an input. China has already been stockpiling critical materials aggressively as part of its own strategic resource security initiatives, and you can expect that stockpiling to intensify. In response to this announcement, the global race to secure silver supply just got significantly more intense. For everyday American investors and savers, the implications are both exciting and complicated. If you already hold physical silver ETFs, silver mining stocks, or any silver-related financial instrument, you are sitting in a dramatically improved position today compared to where you were before this announcement. But the question of what to do now, whether to hold to add to positions, to take profits, is genuinely complex and depends enormously on your individual financial situation, your time horizon, your risk tolerance, and your view on the durability of this policy. What financial professionals are generally advising right now is caution about chasing the initial surge. In any situation where a market moves violently on a major policy announcement, there is almost always a period of price discovery and consolidation after the initial reaction. The first wave of buying is emotional and reflexive. The more thoughtful repricing takes time. If you are considering adding silver exposure to your portfolio, the conventional wisdom is to wait for the dust to settle somewhat before making any significant moves, and to do so as part of a diversified strategy, rather than going all in on a single asset class, regardless of how compelling the story sounds. And the story is genuinely compelling. That's what makes this moment so unusual. This is not a manufactured hype cycle, not a social media-driven short squeeze. This is a fundamental policy shift by the most powerful government on earth, backed by real strategic logic about supply chains, national security, and the material requirements of a 21st century economy. The underlying thesis that silver has been chronically underpriced relative to its industrial importance, and that American strategic interests align with supporting higher silver prices, is not a fringe position. It is increasingly the mainstream view among serious analysts who have been tracking the critical material space for years. What remains to be seen is whether the implementation of this policy can match the ambition of the announcement. Washington has a long history of bold policy declarations that run into the complexity of real-world execution and end up delivering less than promised. The silver price floor will face political challenges, legal questions, and the relentless pressure of global market forces that don't always bend to the will of even the most powerful actors. Opponents in Congress, free market economists, and foreign trading partners will all push back in various ways. The road from announcement to durable policy is long and uncertain. But here is what is not uncertain. Something has fundamentally changed. The conversation around silver has been permanently elevated. The strategic importance of the metal has been formally acknowledged at the highest levels of American policy, the era of silver being an afterthought in financial and geopolitical discussions is over whatever happens in the implementation. Whatever the market does in the coming weeks and months, silver will never again be priced the way it was priced. In the era of convenient assumptions about unlimited supply and modest industrial demand, we are at the beginning of a new chapter in the history of this metal. And in the history of American economic strategy, the question is not whether this matters. It clearly and profoundly does. The question is how you are going to position yourself financially, intellectually, strategically, to navigate what comes next. Stay informed, think critically, watch how this policy develops and how markets respond, and keep coming back for the analysis. That helps you cut through the noise and understand what is actually happening in real time. Because in moments like this, information is not just interesting, it is everything.